Moody's lowers South African growth forecast after first quarter slump. Egypt's annual headline inflation rises to 14.1% in May. Plus, activists urge banks not to finance Ugandan oil pipeline. Thank you for joining us. Welcome to Business Incorporated. I'm Chimeze Obi Iwago. Well, we'll start off with the markets, and the positive sentiment trailed markets in Africa at intraday, with Egypt leading the pack. The NSE index here in Nigeria was up marginally, while South Africa JSE index went up 0.61%. Kenya closed in the red on Friday. In the Middle East, Saudi Arabia and United Arab stock markets rose at intraday after a survey showed their private sectors registered strong growth last month, while other major Gulf markets also gained, reflecting the global rally. Saudi index was up 1.88%, with ROG Bank gaining 0.7% and petrochemical maker Saudi Basic Industries adding 1.4%. Abu Dhabi's index was up 0.84%, lifted by Abu Dhabi Commercial Bank, which rose 1.5%, and First Abu Dhabi, which increased 1.4%. In Dubai, real estate stock pushed the index up 0.90%. The Emirates blue chip developer Emma Properties rose 1.1%, and their development gained 3.4%. Qatar's index heavily rose 2.02%, with banks boosting the index. Middle East's largest lender, Qatar National Bank, climbed 3.2% ahead of a split of its stocks taking effect later this week. And European markets opened higher today after U.S. President Donald Trump announced that proposed tariffs on Mexican imports would be suspended indefinitely. The pan-European stocks 600 climbed 0.4% in early trade. Basic resources leading gains with a 1.3% rise. Trump pulled back from kickstarting another trade war last week, saying in a Twitter posted on Sunday that he has full confidence that Mexico will crack down on migration from Central America after the two neighbors reached a consensus. U.S. Treasury Secretary Stephen Mnuchin, a lead negotiator in trade talks with China, said that Trump will decide whether to implement more tariffs on China after meeting with Chinese President Xi Jinping later in June. In corporate news, Fiat Chrysler and Renault are seeking ways to resuscitate their collapsed merger and secure the approval of Renault's alliance partner Nissan. FCA shares jumped 2.8%, also bolstered after self-driving car software startup Aurora said on Sunday it will partner with the company to build autonomous platforms for commercial vehicles. Renault climbed 1.7% as investors reacted to the merger news. Meanwhile, in the UK, April trade, GDP and industrial data were released this morning. Let's see how that is playing out in the markets. There, let's bring in my colleague in London, Juliana Olanka, to tell us more. Good morning. Oh, good afternoon, Juliana. A beautiful day and, of course, a new week to you.
Good afternoon, Chimmy. Nice to see you. We'll go into the GDP data, but let's do the numbers first. And surprise, surprise, at intra-trade day, despite the negative GDP figures released earlier this morning, the markets are still looking fairly good. The FTSE All-Share is up 0.41%. The FTSE 100 also up by 0.47%, and the FTSE 250 up by 0.25%. The UK not doing so well in the currencies market. Currently, the sterling is down 0.47% on the dollar. £1 will get you $1.26. The pound to euro exchange rate also down by 0.27%. £1 will get you €1.12, and also down on the Japanese yen. £1 will get you just short of 137 yen 68. Now, I spoke to Bosun earlier this morning, Chimmy, about these statistics that have come through from the Office of National Statistics, basically saying that the UK economy is shrinking. The figures have contracted the most severely that they have actually done in 3 years. we've been speaking about the manufacturing industry, and it seems like business that's taken away from manufacturing here is really affecting the UK economy. It seems as if the Asian markets and the Europeans are just not sure about whether or not they can do any manufacturing in the UK, purely because of Brexit and the uncertainty. So lots of money coming out of the UK banks, and also as well job losses. We heard that there were tens of thousands of job cuts that will be taking place in car plants across the UK, and some statistics say that could reach the tens of thousands. So it's a big story to be watching.
Okay, Juliana, aside from those data there, another news on the wire, the UK has agreed a preliminary free trade agreement with South Korea, which seeks to maintain existing trade arrangements post-Brexit. So what more can you tell us about this deal?
Interesting story. Now, the UK's International Trade Secretary, Liam Fox, concluded talks with South Korea's Trade Minister, Yoo Myung-hee, in Seoul yesterday evening. Now, the two of them established a preliminary agreement that would ensure a total continuity in trade between the UK and South Korea, whatever happens with Brexit. And, of course, we're seeing anything can indeed happen. Now, this marks the first post-Brexit trade deal that the UK has managed to secure in Asia, which is deeply important for the UK. Now, just last year, South Korean exports to the UK amounted to about £5.03 billion. Now, it's really important to note that this deal is still very much in the early stages of negotiation. It still needs to be ratified by the South Korean Parliament. And also, very importantly, it doesn't take into account that the UK could come crashing out of the EU without a deal, which is looking increasingly likely. Now, nevertheless, the blueprint does include keeping zero tariffs on South Korean exports such as cars. Now, following the abysmal data released from the Office for National Statistics this morning, this is one deal that the Tories won't want to lose.
Okay, as the week kickstarts, are there companies we need to pay attention to this week?
Breaking today is that the cash-strapped travel company Thomas Cook, they recently announced plans to axe 150 jobs from its head office, 320 jobs from retail roles, and shut down 21 stores nationwide. But things may have turned around for them, as this morning they confirmed that they're in talks with the Chinese conglomerate Fosun regarding the potential sale of its tour operator business. Now, Fosun are already Thomas Cook's largest shareholder, and shares in Thomas Cook jumped by a whopping 22% in early trading following this news. So this is a big story, and it could pick up. There's no confirmation of whether Fosun will buy out Thomas Cook, but definitely one to watch, and we'll keep you updated during the week.
Sure, we look forward to getting more from that. Thank you, Juliana.